Now I'm live. Welcome. This is Noble. Welcome to your midday. Well, actually, it's late in the day. Power hour. What is power hour? It's that 3 to 4 window. So right now, if you're an options trader and you're really active, you're looking at what's moving. You're thinking about, is there anything I need to get in at the end of the day? That's why it's called power hour. People are making decisions. Is there something I need to cut? It ain't going my direction, or something's changed fundamentally in that chart, or some news came out, or something's affected whatever you're trading. Or, like I said, you're thinking about, like you're looking for some deals. You're looking to see, what's just kind of stagnant, not moving. Or, you're not doing any of that. I took one of the rapid. I can't even see that. COVID, the little rapid antigen test today. It was negative. Thank God. I've been masked up. I try to, keep my sanitizer and, stay away from folks. Man. I know some people, there's some people in my family on my mom's, like, though, how you had those cousins, your mom knows, but you really don't know. But we've had deaths in the family. Almost everybody I know has had COVID. One of my closest cousins had it a few weeks ago. He's like, man, I couldn't smell nothing. I couldn't taste my food. I was dead tired. Another one of my homeboys just had it. He like, man, I'm still not back to 100. I feel like I'm still struggling to breathe a little bit. I don't know what this thing is, but I don't want it. So, it's 3:10. I said I was gonna do this at 3 o'clock. I was a little late. That was a great pause. I was a little late, but not really though, because I make my own time. If I say 3, I should keep it at 3. I should, but last minute I had to change something. That's all. So let's do this. Let's take a look. Let's see what is moving or what isn't moving. Maybe it's the better term. Oh, let me do this real quick before I do that. Where are you at? Where you guys at? Where y'all watching? I see I got a few people on, not a ton live. It's cool. This ain't gonna be super long. Rochelle said love the music. Cool. I appreciate that. I got a couple other beats in here too. Let me try this other one. I love this thing. For those who know me, and Rochelle is in Atlanta. That's what's up. Thanks for watching. Thanks for joining me for this 30 minutes. Let's see. Somebody's watching from Northwest Tennessee. That's what's up. West Tennessee. That's what's up. See Tamil Lachey, also in Atlanta. What's up? I talked to you earlier. Congrats on that. I ain't gonna put all your business out there, but congrats. Garnell's up in New York. What's up, bro? Somebody said, what's up? Still sitting here at work, gonna listen on my ride home. Oh, cool. Let's see, I got somebody out in New Jersey. Jersey. I said thanks, yeah. For sure. To pursue higher in anything, you always gonna get my support. I'm that dude. I want people to become optimally your highest best self, physically, mentally, intellectually. Go for it all. We get one life. Go for it all. Now it's hard to stay in that zone every day. I can't pursue super hard everything all at the same time. It may not be realistic, but the principles are there. My guy Brandon. B, what's up, B? I'm here for the free trades. I'm gonna ask you for some free trades. How about that? I'm gonna ask you for some free trades. Brandon the Riot. That's my guy. Okay. So Let's just look at some charts. Look at some charts. See what the market's doing. Let me get this up and put myself in the little bottom corner this time. Let's do this. So this is good old NASDAQ. This is that struggle period. I was joking earlier. I'm sorry. Hold on one second. I'm sorry, but I got a full beard. I was just y'all know I crack a lot of jokes. Why am I telling you about why am I going to a beard? Because earlier I was like, man, this market is struggling to get some growth, like some of y'all beards. Some of these beards, I don't know, just cut it off. All them patches, just let it go, man. You ain't gotta prove nothing to nobody. You ain't gotta prove nothing to people like me. You ain't gotta prove nothing to people like me. Anyway, so as you can see, up in this period here, this area, NASDAQ was having some trouble. Classic range, all right, where the high doesn't really make a new high and the low isn't truly making a new low. We're just retesting the same areas, right? Matter of fact, if I adjust this for just a second, I really will kind of put it like that, right? So we had this high of 408, but we just could not get through 400. Oh, and when the market struggles and tries to get through 400 one time, the second time, the third time, the fourth, let's like, how many times can we not get buyers, not get momentum? The more times you try to test the price and do not get momentum, what happens? Think about it emotionally in a real simple. It's almost like, golly, y'all know I'm always trying to relate things to things, but I don't know. I'm always talking about love and relationships. My mom was a therapist. That's actually my other podcast. I'm about to launch 2 podcasts. One will be like business, entrepreneurship, trading, this or that I do for y'all all the time. So it's what you know. The other, oh man, love, relationships, manhood, just things that I need to add my positivity to the world. I need to add some critical thinking to the world. So what's my point? When the market is doing that, that's like trying to express a need in a relationship, and they just not hearing you. How many times, month after month after month, you trying to get what you need? We needed the market to go up. We needed more buyers, and we asked, and we got up there, and then we didn't get in, right? So that creates a frustration. These principles work across the board. It creates a frustration. That's a tough relationship. That was a tough period in the market right there. Why? Because every time we got to 400, we could not get enough buyers. And to go higher, we need more volume. You need more volume to go higher. Period. Right? That's what we need. Um, to really get, a classic bullish move, you need some bulls. The running of the bulls, that's all you need to picture. Picture that in your mind right now. The running of the bulls. Y'all seen the running of the bulls? Yeah. That really is what you need, right? Oh, I got a couple different beats in here. Let me go back to this one. This is my super chill beat right here. Oh no, that's the wrong one. My bad. All right, so I'm gonna rock with this one for the rest. Turn it down a little bit. So the market was struggling, and we all know the market started to come down. So we went from that period to a short-term downtrend, short-term, which was this period here. All right, so we made that last little swing high, and then we went down for 1, 2, 3, 4, 5, 6, 7 consecutive days. That's a lot for the S&P, for NASDAQ. Actually, let me see what was the percentage. That percentage drop from that high to low is about 15%. So just those 7 days, market lost 15%. 15% of its value. So we're trying to go back up. We're trying to go back up. We had a really nice hammer off this bottom. I love to see hammers off the bottom. We got a little pop out of that, right, for about 3 days. And now what's happening now? We're just ranging. I've had this alert. I've had this alert on my chart for literally the past today. 1, 2, 3, 4, 5, 6 days. Just kind of waiting. Why? Because if all of these 1, 2, 3, 4, 5, 6, 7, 8, 9 days, all of these days of buying roll over, conceptually, in a general sense, what do you think is going to happen? If price gets under 350, what's going to happen? What's most probable to happen? That's the better question, right? Nobody knows what's going to happen, but you just need to be able to understand price action well enough to know who's going to get frustrated, what's happening in the market, what are the Feds doing, how does this analysis of NASDAQ, broad market index, how does this carry over to your individual stocks? All right, so let's hop over to Apple real quick. What's up with Apple? Look at Apple. Apple's doing the same thing. Look at this. Stuck in a range. Actually, I could extend it a little bit. Extend it to that candle. We're still inside. We're trying to get above, what is that? January 30. January 31st. 1, 2, 3, 4, 5, 6, 7, 8, 9. About 9 days of sideways activity. That does a few things when you're going sideways for several days. It's going to make your contracts, if you're in calls, we're talking to my options traders, that theta is just slowly, just every day pulling some value away. You're not really losing, like the stock isn't dropping, but your contracts are losing money daily. That's theta. Welcome to theta. I need a sound for theta. I need to find a sound for theta. Theta's that constant with options contracts that's always lurking. It's what makes prices, part of what makes the math behind. Like, you can't just look at a chart and say, oh, if price goes from here to here, my options contracts will make X amount. It's different. You can do that in foreign exchange if you can do the math quick. You can do that with futures. You can do that with buying stock outright if you were to buy 1,000 shares or whatever. You can do the math. Options, you can't do that math in your head. Why? It's too many factors. There's too many factors. Internal volatility. You got depending on which strike, is it in the money, out the money? There's tons of factors. What was the delta when you bought it? It's a lot to it. Let me see. Christopher said has some technical difficulties logging in with StreamYard. Now can you see my name? Yeah, I can. Christopher Johns. I can. Yep. My beard still don't grow. Yo, it's cool, man. It's character. Forget the beards. I just be messing with y'all. Yo, a man is who you are at the core. Principles. What do you live by? That's what we are. That's a man. But women do like these beards, so I'm gonna keep this one a little longer though. I'm gonna be real with y'all. Okay, so let me pop back on my chart real quick. So Apple's in the same place. In the same place. Let's look at Tesla. What's Tesla doing right now? Look at Tesla, y'all. Tesla's doing the same thing. Tesla is also in a nice little range. And today we had a nice push up and then came all the way back. This is like a classic doji right here. This candle, it's a doji. Doji. So here's the thing, y'all. When you really get more advanced with trading, all you really technically are doing is you learn to process the information and see the patterns a hell of a lot faster. That's all it really is, right? So, for example, okay, classic something for a second. Classic trend lines. This is one of the most basic things you should learn, should know, right? We got a trend line break right there. All right, price pushed up, we pulled back, we made another push up, and when we closed under that, that was tough, right? So it's like, okay, we crossed over that trend line. Now, I wouldn't suggest that be your whole strategy, just drawing a line and expecting if we break it for it to drop. No, you need more analysis than that. No, of course you need more analysis than that. But does every time a trend change, is there a trend line being broken? Yeah. Fundamentally, yeah. All right. So this is a classic range, right? Which is all we were talking about. All right. This hammer down here, reversal candle. Got to know reversal candles and what they mean and how they form. You got to understand ranges like this and what they do to your options contracts. The the psychology of what's happening in the market. Why do we have these periods where we freeze? And more importantly, when this is happening, why have you been super hard trading for the last 9 days? If you're looking at Tesla, it hasn't gone anywhere. So I don't, you know what I mean? It's like, and that's the patience we don't talk about. There are times where you literally really should not be doing anything. If anything, you're setting yourself up right now for a move. So right now, you maybe today you bought some puts at the end of the day. Why? Because you expect price to drop down to like 860, 850 tomorrow, next week, right? You kind of more bearish. You think we're going to come out of this range and go down again. So some of you guys are just kind of setting yourselves up for a trade. Some of y'all believe the opposite. Based on X, 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 A, B, and C, you believe the market's going to go back up. All right. And so even though we're in this little period where we're trying to, all right. Now, some of y'all, unfortunately, are losing right now because you just won't stop trading and you don't know when to just literally relax. You don't have to trade every day. You don't have to force something every week. You just really don't. I know this is counter what all the gurus tell you because they selling products and I sell some too, but I'm probably the only person you're going to ever really hear this year talk about. Sometimes the best trade is not trading. Real talk. So let's look at Tesla today. Actually, let's do this now. I'm gonna hop over to Nasdaq real quick. Because Nasdaq is that same doji candle, but forget a day. Let's go down for a second. Let's go down to like the 15-minute chart. Let's look at what happened today, from today to yesterday. Here's the story from today to yesterday. So check this out. Let me draw some lines here. I'll make it a 30-minute. Make it a 30 minutes. So you can see it a little bit better. So from the close yesterday, this was the close yesterday. We opened down here. Open down there. What is that? Classic gap. The market gap down. And the funny thing is we gap down right at 8:30. Whenever we gap down to 8:30, I don't even look at reports like I used to. I'm sure some sort of report came out. Matter of fact, is Brandon, you still here? You still there? Let me B, what report came out at 8:30? I know you know. Let's see. Jerome said, listen in the car. Don't say brothers ain't loyal. Yeah, you are, man. I appreciate that, bro. Listening in the car. That's what's up. And I can't even lie, Jerome. I got my little headphones now. I got the best equipment, generally speaking, that I needed. Spent a little investment money to just, get the quality up, getting ready for, trying to do my podcast and all that. Even though, I mean, technically this is one. It's just you got to view this on YouTube, right? You can't get it on iTunes yet. So yeah, I appreciate that, man. Appreciate that. I feel like I'm on the radio right now. Like I can hear myself now. I got my headphones. I'm feeling good. So you can't see my charts, but you can watch this later. You can always get these on YouTube. Anytime I go live, now it's being streamed on Facebook, but also on my YouTube channel, which is Being Noble. Being me. Just me, not nobody else. I don't want to be nobody else. Okay, so we gap down. That's a nice gap. Now, here's the thing. When I was new to trading, I would see a move like that. Reports came out at 8:30. Something dropped the market. And I'm like, oh, I know we're going back. I know we're going to continue moving. It's gap and go. We gap down, we just going to fall. Not necessarily. Sometimes that happens. Sometimes earnings will happen. You get a good earnings call. Market will gap and go. Will break key levels. Sometimes the market will gap and go. Something very positive will come out about the stock. There's talk of a merger, acquisition, some sort of, something that was fixed, in terms of like things that the shareholders were like, hey, we really, y'all need to get this thing straightened out. They put out some, something with the cars, a production, some sort of information. Will gap and go. But if you really, really, really pay attention to this, we really hadn't dropped all night. All right, so we were in a tight little range, and then at 8:30, the market fell off a cliff. Anybody find out what happened at 8:30? I'll find it myself. What am I doing? I'm going to babypips.com and I'm going to filter. I only want to see US. Where is today? Today is here. So yeah. So today, inflation. Oh, that's right. We talked about that. I knew that. Well, I like literally wasn't thinking. Yeah, inflation. So at 8:30, there were 1, 2, 3, 4, 5, 6, 7 reports. Jobless claims came out at 8:30. Continuing jobless claims for a week average, core inflation rate year over year, inflation rate year over year, another inflation rate. And yeah, so really kind of like technically 4 inflation reports, really 2, really 1. You just want to care about the main thing, what's happening. So inflation, everybody got those stimulus checks. There's a consequence. There's a consequence to that. Let's see, what else did we have? We had a few other reports. What is this? 30-year bond action, monthly budget statement, some natural gas stuff. So that's what moved the market. Market didn't like what came out. They're probably going to raise some rates. Things are going to be more expensive. That's not a good thing. Investors don't like to hear that. So the market reacted. Market dropped. So I'm going to go here to a 15-minute chart because we know the market dropped. But look at what happened right off the jump, right off bat, right at 9:30 when the market opened. First 15 minutes, bullish activity. This is your classic gap fill. All right, we wanted to fill that gap. It doesn't always happen, but it happens like 80% of the time at some point. This was a fast one. This was literally gap filling the very next day. All right, so you see my white line. That's where the gap fill was, where that gap was, where we had to get back up to. And for the first good hour, market just cruised. Market cruised. Went right back up. Right back up. We got here at 10:30. There's something called the 10:30 reversal. What does that mean? It just means that the market tends to, it's just a pattern. Doesn't mean it's going to happen every day, but put a little box over that 10:30 candle. And that was pretty much the highest 15-minute bar of the day. We closed under that bar. Market got a little tight. Oh, we got tight there. We had a little doji. We tried to push back up. We're now still inside of this big, ugly, bearish candle. And we did not get what we needed, which was more momentum. We did not have enough buyers. So what happened? The market bloop. This big, ugly candle kind of said what was going to happen the rest of the day. We're going back to the low. That's a big, ugly candle. This is the market saying, yo, I know you were trying to go back up again, but guess what? We're going back down again. You don't have enough buyers. You have more sellers. We can't sustain. Market went right back down. And right now, with not a lot of time left, we pretty much went right back to those lows from this morning. All right. So that's like this is an adventure. It's a whole adventure, right? So that's why when we look at NASDAQ and Tesla and everything else, everything started the day off well. NASDAQ represents 100 of the best stocks in the world. It's heavily financial. It's your test. Matter of fact, let me read some of the stocks real quick that are in NASDAQ so you know. The big players: Microsoft, Apple, Google, Facebook, Tesla, Amazon. Some other big names you should know: Adobe, Nvidia, Qualcomm, AMD, Intel, Cisco Systems. PepsiCo's in there. Costco's in there. I love Costco. Although I never really trade Costco. I just love talking about it. Zoom is in there. Don't be surprised if they take Zoom out in a minute. I'm not going to be surprised if I'm telling you, mark my words. Zoom's coming out of NASDAQ. I don't even know how I got in there. DocuSign. What else is in there? I said Amazon. Yeah, I said Amazon. Marriott, Starbucks, O'Reilly, Ross Stores, right? So you got some, you got some healthcare, you got utilities, you got industrials, you got your consumer discretionary, right? Your retail stores, you got a lot of information technology, communication services, right? Netflix is in there. Activision, Blizzard. video games, right? Baidu, Match, T-Mobile. So got a lot of stuff in there. So yeah, today, or I'd say right now, we're in an interesting, little place. Because your long-term you is saying, hey, please go back up. My account already took a hit. Market dropped 18%. It didn't get into 20% correction territory, but it dropped enough. Can we get some momentum? Can we go back up? Now, unfortunately for those of you guys who are like new to the markets, I gotta say it. You've been spoiled. You've been spoiled and didn't know it. NASDAQ, S&P, Dow. Since the lows of COVID, we've gotten like 22, 23 amazing months. It's been like the bullish, steepest uptrend. You literally can just draw a trend line across the bottom of COVID to like even where we are now on NASDAQ, on S&P. It's a very, very steep uptrend. I don't think you'll find a steeper uptrend over the last 30 years. So that's a good thing. A lot of new people trading. Okay, cool. That's great. That's great. But you got to make this can't just be a moment. If the market gets choppy or stays choppier, we do a little double dip. Let's say we end the year down. You can't just throw away this trading thing because you tried it for 2 years. It's not how it works. All right. I want you to win. I want you to win long term, big. I do. But there is there's a certain level of perseverance, resilience, and then this long-term view as well. All right, it's your long-term view. Long-term. What are some stats that I know? 3 to 4 years after the biggest losses in the market over the last 125 years, the biggest gains come 3 to 4 years after the biggest losses. If you're an investor right now, I know right now is kind of like, ugh, but you really should be thinking about February 2023, 24. Why? Because the really sharp dip that we had, the big loss, came in February of 2020. The biggest losses come 3 to 4 years after, right? Money's not made super fast. You can make really fast money, yeah. Options, futures, foreign exchange, some cryptocurrencies, yeah. But most people don't get rich and wealthy from the fast stuff. They get rich and wealthy over time with compound interest. Now, you're supposed to use options, futures, foreign exchange, your leverage products, all right, as skill set, profession, take it really serious, do any and everything you need to learn how to win.
I do anything to win.
Yeah. I love this little Jordan clip. Why? Because that really is the mindset. It really is. What will you do to win? I mean, anything legally, anything within reason. But will you stay up late to study a little bit longer?
I do anything to win. Yeah.
When I first started trading, I worked in 9 to 5. Some of y'all hit me up like, yo, I work in 9 to 5. How do I make this work? Get up at 3 in the morning.
I do anything to win.
Study the charts at 4 or 5 in the morning before you go to work.
I do anything to win.
When you come home, I know you have long days and you got the kids and the wife and I know. But
I do anything to win. Yeah.
And I love playing this clip, so I'm gonna play it again. For those of y'all who've been watching my stuff lately, I've been wearing this out, but it's so good. And don't worry. My sounds, I'm gonna change it up as I go. Whatever is kind of relevant. But right now, I really like sharing this because I think it's such a great perspective. So, what is winning? Here's Tim Grover. If you don't know who Tim Grover is, he's an amazing author and trainer. He wrote the book Winning, another book called Relentless. I love both. He trained Kobe Bryant. He was Kobe Bryant and Michael Jordan first. His personal trainer when professional athletes didn't even have professional personal trainers. Jordan was like,
I do anything to win.
So he hired a personal trainer, even though he was already at the top of his game. That's how much he wanted to win. So I want to play real quick with Tim Grover, how he defines winning.
Winning is not about the trophy and the accolades. It's about the grind. It's about the obstacles. It's about the challenges. It's about the pain that you endure along the way for that 30 seconds of being able to either stand on the platform, be acknowledged by individuals that are close to you. But when that happens, your mind has to immediately shift back because now you felt and tasted something that you could only get through winning. Are you willing to do it again?
Are you willing to do it again? That's so real. It's such an amazing definition of winning. Because he talked about the challenge. You got to go through the challenge of it all. The pain of staying up late. I didn't want to stay up late all those years ago to learn all this stuff. I didn't want to, but I had to. Why? Because I wanted to win. So I'm always going to encourage more time with the material. When I say material, I mean learning however you learn best, whether that's with a class, somebody like me or my cousin Joel, you know. Maybe you have somebody in your family that's schooling you. You know, you guys have personal mentors. That's cool too. Maybe you love YouTube. You got certain people on YouTube you watch and follow. Hopefully, I'm one of them. Go to Being Noble. As I add more content, kind of really build the channel up and get more consistent. But you know, you got to keep learning. That's required to be a good and great investor. You should at some point. It shouldn't feel like work. It should be not fun in like a thrilling, exhilarating sense, but it should be something that just like for those who love cooking, you just love feeding yourself. You know your food is clean and you know whose hands touched it and who's prepared it, right? I love cooking my own food. And don't get me wrong, I love eating too. Sometimes you just want your own food, right? But it's not a labor. It's not labor to cook your own food when you're like, I want to eat my own food. It's a joy, it's a pleasure. It's not work. It's just life. You gotta eat. You want your own food, right? Same thing with trading. You know, we just talked about technical analysis. Oh man, there's so much you could talk about. Jeez, so much you could talk about. So many indicators, so many different studies. You know, entry strategies, exit strategies. You got so many different gurus and different people out, and everybody has their own different system. What actually works? What doesn't work? At the end of the day, here's how I approach things. I started to ask myself really simple questions maybe like 4 years ago. And it's really like with my intraday, like future stuff, it got me to like where I'm at now, where I just, you know, the system is like I'm biased, but I think it's pretty amazing. Right. I would ask myself really simple questions. If I could only take one trade this week, would this be that trade? I got 3, 4, you know, kind of there's several different things I look at. You can put 20 things on your chart. Every time I would think about the technicals I'm using, and I do this to this day. If I add this thing, does it give me an edge? And by edge, will it help me to make more money or avoid more losses? If it doesn't, I need to take it off my chart. Y'all know I love Bollinger Bands. You don't see them on my charts anymore, though. Why? Let me pop up a chart. You don't see them on my charts anymore. Why? Because I understand the indicator well enough to know when it's working without seeing it. I don't actually have to see it. I just for years was so used to seeing it, right? But I didn't want to confuse my students. I didn't want to make you think it was critical to see it. No, it's critical to understand it. You can always have another study where you pop it on and take it off, but you don't have to look at it all the time. So take it off the chart. Simplify, simplify. Less is more. Less is actually more. Right? I did a lot of consults last year. A lot of consults. The main thing I kept seeing with my options folks, trading too many stocks, tracking too many stocks, not consistently entering for the same reason every time. So all I've been preaching, pretty much all of 21 and now as well, core 5. If you can't make money just tracking 5 stocks, it doesn't matter what scanner you use and you know all that sophistication. You can't just make money on 3, just 3. Trade an index, Apple, and something else. You can't make money on those three. You're going to struggle making money across the board. It's not that you need so many trades or you need so many high probability. You need to find the thing with volume. Trade the stuff that has the best daily volume and the best liquidity. A lot of people got really excited about Google talking about. Matter of fact, let me pull up Google real quick. Where are we at on Google? Oh yeah, Google's a good example. A lot of people got excited about Google.
Winning is
Wrong one. About Google. Why? Because good old Google announced that July 15th of this year, they're going to do a 20-to-1 stock split. So what's the price today? $27.66 right now. I'm gonna just say $27.70. $27.70 divided by 20. That's $138. If today was the day where that stock split happened, a big name, a blue chip stock everybody uses, Google is literally a term. You can't even avoid Google. You can't avoid it. Right. If today was that day, shares would only be $138. More people are going to trade Google when it goes down. More options traders and more people who are like, oh, Google's only $138. Wow, let me buy some Google. All right. So that volatility, the liquidity is going to be there. It's going to be even more attractive to trade. Right. Or buy shares from for your long-term portfolio, A, B, and C, right? And those are the stocks, I think, that it just makes the most sense to trade. Let me see. Somebody said, oh, CPI. Who's that? I don't know how to say it. Is it Robbie? Rabe? I don't know. It's probably not Rabe. That's probably not right. I'm terrible with names. I'm sorry. That's why I always ask, though. Somebody tagged a few people. Nate Gray, Andre Green, Freddie Taylor, Jason Hall. Yeah, thanks for tagging people. It's always I wish there was a camera right here in the middle, though. I gotta forget to always look up. I want to look at y'all, or at least give you the appearance that I'm actually looking at you. So, what you're seeing on this chart is Google actually. Matter of fact, let me put it on a different time frame. This, my friends, this was Google's positive earnings. Look at that. Ooh, look at that move. Look at that move. Went up to 30.60 and after hours started coming down. The first day, second day came down, third day came down, fourth day came down, fifth day. We are basically right back where we started. Pre-earnings. Did we test that area? Yeah, we did. Put a line right there for a second. So we came all the way back down to 27.50. All right, and that was pretty much we closed that day, the day they had earnings, 27.60. So for those that don't know, earnings will usually happen after pretty much like at 4 o'clock, after hours, or sometimes companies will have that earnings call to announce earnings and what's happening and did they meet their, earnings per share, revenue goals, they'll talk about the business segments, what's moving. We're all the way back down. So that really, really big, strong pop. All right. Slowly come right back down. That's not a good thing either, as we talk about the broader overall market, right? And us kind of being stuck in this, some stocks 5-day range, some 9 days, we really haven't gone anywhere. That's a setup. That's a setup. That's like saying something real crazy to somebody and they just look at you. They don't really react. They just get like they don't react. They're going to react. They're just thinking, should I forgive this fool or should I hit him in the face? That's what the market is doing right now. It's just deciding. But we're going to move. We're going to go up. Or inflation and more jobless claims and other factors will eventually get people to really move. And momentum will go with it. We can only go up or down. Now, for your long term, I hope we go up Clearly, I'm a bull for the most part. For the most part. So it's 3:48. Any stocks you guys specifically want me to look at? Let me know. I think I still got a few. Still got some folks on. If you want me to look at anything specifically, I would love to. Because we only got 12 minutes until the market closes. What else did I look at? I looked at oh, let me do that for a second. You guys can't see this, but I'll read it to you. I'm gonna go to NASDAQ real quick. Actually, go to S&P. And I want to see, where is it at? Oh, where is it at? Oh, I want to see the option statistics for today. Ooh. So today, right now, as of right now, we had about 3 million calls in total volume, about 4.5 million puts. Say that again, about 3 million transactions, 2.9 million in calls. People believing the market was going to go up. 4.49, just say 4.5 million believing that price is going to go down. Puts today, puts. All right. Your PC ratio, your put to call ratio is 1.5, 1.509. So, that's information, walk away with, think about a little bit. It's like, ugh. Let me see. Let me show you guys the VIX really quick too. I meant to show it yesterday when I did. If you want to, because I did this yesterday. If you want to learn about futures trading, a really dope, free kind of training. Just great information. Make sure you know what they are. I think you should be learning as much as possible. Let me take that back. You should be learning core things that you need to understand if you're like getting into trading. You really want to take this serious. I think you should know how futures work. What's the difference between futures, options, and foreign exchange? They're all leveraged, which in my mind just means you can make fast money with either of the three, all of the three. You don't have to trade all three, but I think you should understand how each of them works. And there's some major differences. Differences in when you can trade, how much money you need to trade. One of the things I fell in love with futures is I don't have to look for something to trade every day. I literally am trading the same thing every day. You just have to be really, really precise and technical. You have to actually know how to trade. I'm not saying you don't have to know how to trade the trade options. Of course, you need to know how to trade the trade options as well. But Forex and futures are different because there's no time decay. There's no, you're not buying a contract where you have X amount of time for price to eventually go your direction if it doesn't instantly go your direction, right? You don't have that luxury with foreign exchange and futures. All right. So I'm looking at the VIX right now. We got that spike. This spike when the VIX popped up really high, that was 124. Right now, today, VIX was a little bit higher. The higher VIX goes, the lower the market goes. So this day right here, 124. If I hopped over to S&P to see what day was 124. 124 was this day. The low. All right, so that's a very simple but powerful correlation. You need to know what the VIX is. The VIX, the day the VIX spiked above 32 or whatever that was, it was when the market went as low as it went. Right? It created a low. So when the VIX spikes and makes a high, it's just the market making a low. Actually, we went up to 30. How high did we get? 38.94. So it almost got to 39. All right, almost got to 39. So you need to know that. It's important. Let's see. Somebody said Lucid. Yeah, I'll take a quick look at Lucid. So Lucid, for those that don't know, it's everybody, every EV company that hits the market, People are always going to say, is it the Tesla killer? Is it the Tesla killer? It sounds so provocative. None of these so far have really made any dent or challenge to Tesla. They really haven't. So let me do this. Let me put my 200 period moving average on here real quick. Actually, I'll just do it this way. So here we go. So this is Lucid. So we're down. And just like the market, it's been pretty much for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. It's been in this range. 26 to 30. We really haven't been able to get above 30. We haven't gone any lower than 26, but we got down there twice. All right, we're still under the 200. So this is just as sluggish as everything else, right? And that's the point. That's why I always start my analysis. Anytime y'all see me do any sort of technical analysis, I always start. Usually I start with the month and week chart to get the broadest, best view. Because if you jump to the week, sometimes it's like, is the trend down or up? Right now on the day charts, on pretty much, well, at least on Lucid right now, the trend is down. But is the market really down? The time frame matters. Right? The time frame matters. So I always go to NASDAQ, S&P. Why? Because it just helps you to know what everything else should look like before you even look at it. And think about that. I started with NASDAQ in a range, tight, market not going anywhere, trying to make a decision. Oh, where are we going to get momentum? Are these, hedge funds with billions and billions of shares and millions of dollars at their disposal, billions at their disposal, right? What are they thinking about inflation? Like, they're the ones who move the market. We just want to hop on board. Retail traders don't move the market. All right. And most of the trading is really done by computers. Tamil said, is that total volume high or low? I think, Tamil, you might have been asking about the total volume for those S&P contracts. Oh, that's a good one. Actually, you know what? Google it. I don't know the average daily volume. Off top, I don't know. So yeah, but that's one of those things. Great question. Love how you're thinking, right? And that's how you guys should be thinking when you're watching stuff like this. I'll give you a fact. Okay, I went to the puts and call ratio. 2.9, just say 3 million calls bought today on the S&P. 4.5. But what does that mean? You need some context, right? So what's the average? You need something to compare it to. Great question. Great question. Simple cash offer. Said, how you doing, though? Do you use 1 minute squeeze for futures? What time frame do you get direction from for day trading? So I'm gonna say this with a caveat. Simple cash offer, whoever that is. I love squeezes on all time frames because at the core, the squeeze is based on Bollinger Bands and Keltner channels. So do yourself a favor. If you're using a squeeze, before you fall in love with the squeeze, do some research on Bollinger Bands just by themselves. Don't even worry about the squeeze or Keltner channels. Then spend some time with Keltner channels. The two together are what creates the pattern. The variability in between those two is what actually creates the squeeze. So you don't really need a squeeze. You can put Bollinger Bands and Keltner channels on your chart. And if you know what to look for, you know what the squeeze is doing, right? Because Bollinger Bands are measuring standard deviation, right? As we move far away from the average, go exponentially high, exponentially low. Okay, cool. That's important to know. But Bollinger Bands only work in low volume, right? Kind of normal markets. Stuff gets crazy volatile, they don't work. Right? I learned that the hard way years ago. I tell the story all the time. I learned that the hard way. That European debt crisis taught me some stuff. I was using Bollinger Bands and then they just stopped working. I was like, what the hell is this? All right. Volatility. I didn't understand volatility. Keltner channels are based on average true range. All right. So when market is just cruising, Bollinger Bands won't matter. Keltner channels will lead the way. They'll literally point and tell you the direction very strongly, right? But sometimes Bollinger Bands are faking, but sometimes Keltner channels are faking. Which one is right? Ugh. All right. So that's really what the squeeze is. So I love the squeeze because fundamentally at the core, the squeeze is just math, right? The squeeze is sound math. It's two very sophisticated indicators being sort of measured, right? The variability between those two together when they compress and when they expand, right? So I love the squeeze. I would say you can technically use it on, you can use it on any time frame for sure. And to answer the other part of the question, let me put that back up. What time frame? What time frame do you get the direction from for day trading? That's a great question. And I'm gonna answer the question. I've traded y'all the 1 minute, the 15, and when I say traded, I mean like for 5-6 months straight, just the 15. When I first got started, me and my cousin, we was doing everything. That's how we learned. That's why we're here now to this day. It's why I know so much. So yeah, I've traded the 5 minute, the 1 minute, the 3, the 7, the 10 minute, the 15, the 30. At one point, we was trading 20-minute candles. I trade everything you could trade. I can't tell you it's a fact, but it's a fact to me. The best time frame for your intraday moves, 5 minute. It's 5 minute. 15 is too long. The one way too fast. The one will have you. The one is crazy, right? So my anchor kind of for the day. And here's the thing. I'm technically market just closed. I'm technically using 3 time frames when I trade futures. Intraday, anything intraday. I'm really using 3 different time frames. But I don't have all 3 charts up. So I normally have 2 charts up. I'm kind of taking my entries off the one. Why? Because it's the shortest time frame. It keeps the risk lower. If you trading off the 15, where you gonna put your stop? Under the last 15-minute candle? That's a much longer candle than a 5-minute candle. So you just instantly reduce risk if you can go to those smaller time frames. But you still have to be very, very clear on direction. And you really have to like know exactly like the classic setup for a fake. When does the market reverse? You know, and I've spent so many years figuring that out. I feel like the last like 2, maybe 3 years, I got super sharp. So yeah, I'd say 5 minute is your friend. 1 minute entries, you still should know what the 15 is doing because it's kind of like an anchor too. It really is. Great question. Jason said, thoughts on swing trading SQQQ if NASDAQ breaks down below our current sideways range? So it's a good question. Dang, why can I not see these comments down here? It's weird. Let me pull up SQQQ. Woo. Oh, okay. I had to go to the day chart. So let me go back. These are one of those leveraged TQQQ. I always say it's like triple NASDAQ. All right, so it's like QQQ is the ETF. If you trade TQQQ, did I say 3 Qs? TQQQ. Yeah, okay. It's leveraged to basically move 3 times. Right? So if NASDAQ is up 5%, which is a lot, if it's up 5% in a day, TQQ will be up 15%. But they kind of like it resettles. It's like it's a daily thing. So it's actually the math is a little tricky, but if you get a really sharp drop and you're in like TQQ, which is designed to help you make 3 times faster money, leverage ETF going the bullish direction, which is why Jason, who was that? Jason is asking about SQQQ. SQQQ is basically short. All right, so think of T is triple going long, the normal direction people go. SQQQ is a leverage ETF, but it's designed to make you 3 times the money going down. So you're thinking about it the right way. Matter of fact, let me check something real quick. Oh, yeah, and you can trade options on SQQQ. Wow. 11,000 puts were bought today, 120,000 calls. But I think that's because it's inverse, right? So that's a lot of people betting. What is that? 11 to 110. It's like a multiple of 10. So if you're in that SQQQ world, clearly it's a multiple of 10, right? For every one person who thinks the market is, or at least with this, thinks that market is about to go up 10 times, and I think it's about to go down. If I looked at TQQ, that's interesting. TQQQ, it's actually up 100 today, 150,000 calls, puts 124,000. So not as big of a difference, right? So you got to think about it. If we're even talking about leveraged ETFs, that's a certain type of trader, right? So, you know, make sure I'd say this, make sure you know how the math works. Because if we're talking about buying directly, that's one thing. If we're talking about options, that's different. That's a little different, right? Just because there are two different ways of buying, right? So I would say just make sure you understand how the math works. Because, for example, if I bought TQQ today, the market dropped 2 days, 5%. I'm down 15%. No, let's say one day. It drops one day. Let's matter of fact, let me change them. Forget the math. The math, well, it is the math that I'm trying to get you to get. Not that you don't get it. But if it drops, it's going to take even a larger move to get us back up. Right. So that's the thing about those leverage ETFs. It's not like it's not 1-to-1, right? If I lose 3 times as much to get back all the way to the top, it's not making 3 times as much. I actually have to make a bigger move just to get back, right? So that's the tricky part. Make sure you Investopedia has some great articles, but just make sure you do your due diligence. And let me make sure I answer the question. Oh, if NASDAQ breaks down, what do I think? I mean, I'll tell you this. If NASDAQ breaks down, then yeah, I mean, SQQQ is designed to give you 3 times the leverage of that move. So I wouldn't suggest. It kind of depends on who you are. You know what I mean? Like, I try to answer as many questions as I can, but to make it kind of customized. You know what I mean? I would say if this is your like very first time ever touching SQQ, once again, do your due diligence. Make sure you understand how it's leveraged, right? How that math works, because it can get you in a bad situation too. Now, if we were even talking long term, here's the crazy part. Let me show you this really quick. For those of you guys who are like, oh, I didn't really know too much about these leverage ETFs. Let me hit you with this real quick. You'll like this. Y'all gonna love this. You'll like this. Let me just find it real quick. Hold on. So check this out. Great question, Jason. Appreciate that. Let me pop this up. So this is a calculator I use. It's like a return calculator. Just lets you look back in the past. That's all. So check this out. QQQ. If you have been buying QQQ, no initial deposit, $100 every month, just $100 every month. But for the last 12 years, how much would that have made you? Is that right? Yeah, that's right. $100. You be averaging since 2012. You be averaging about 22% return with Nasdaq. Your $100 a month right now, you be sitting on 36,000. 36,000, right? If I popped in SPY really quick, which is the spiders, or S&P, a lot lower, 15.5, right? So anytime we talk about ETFs, I'm like, why would I want 15.5%? I can get 22%. That's 7% compounding. That adds up. All right. So for fun, if I throw on TQQQ, the number gets a little crazy. I actually have to make it weekly and go to 25. I don't know why this calculator does that, but I know it always forces me to do that. So this is still at $100 a month, but it's basically $25 a week. It jumps up to 120,000. So think about that. TQQ, roughly $100 a month, last 10 years. You'd have 120,000. NASDAQ, same. Matter of fact, I'll do NASDAQ with the same 25 a month. I mean, 25 a week or 100 a month. 42,000, compounding a little bit faster. 23% return, right? So buying weekly, $25 weekly. Right? But it's time, it's the time, right? So 42,000, $25 a week on NASDAQ last 10 years. TQQQ, 120,000. 118,000, 42% return. So yes, over time, those leverage ETFs are amazingly powerful. Amazingly powerful over time. But in the short term, ooh, it gets ugly real fast. Right. So once again, I would say with anything you're trading, you know, depending on how much leverage it has and how it moves and how that math works, you know, you just got to be ready for it. Got to be ready. Got to know what you're trading and have some expectations. So great question. I'm going to call it a wrap for the day there. Thanks for that one, Jason. All the great questions I had today. I appreciate it. Appreciate you guys being here as always. And as I always say, share this video with somebody that you know and that you love, needs to learn a little bit more about the market, needs to think a little bit more about wealth and how they're spending their money. You know, we covered a lot today. Market's kind of stuck. A lot of stocks are stuck. We got to move. We're going to go one direction or the other. Which direction? I don't know, but I know what to do. If this happens, then that, right? That's really how traders think. It's not, I know what's going to happen. It's if this, then I'll do that. If this happens, then I'll do that, which means you should always be ahead of the trade because you already know we're going to go up or go down. And we might go right back down, hit the low, and then still come back up. So it's not just like one decision is just going, you know, it's a daily, weekly, pulling in information. Where's the market? Every day the market's in a different place. The story can change at any time. All right, inflation came out today. You want to do some research? Look at Google just inflation, Jerome Powell. Google the Feds. What did the Feds say about inflation? That's your homework. Talk to y'all later. Thanks for watching. Peace.